Hello guys and welcome back to another video at the Capital Traders Group. Now in this video I'll be going through how to choose the correct zone to execute orders from, which I see a lot of traders struggle with, especially when trading using smart money concepts. So without further ado, let's get right into it. Now there is a number of criteria that has to be met in order to pick the correct zone. Now usually when you mark out a zone, you'll get two zones, right? You're going to get the extreme, which is the most prominent supply zone, right? And then you're going to get the decisional, right, which is the zone before the extreme, and it's usually a zone you have to decide whether or not to take an order from. Okay, so you have the main swing high, and then you have a zone before that which will leave a price inefficiency before that as well, which I'll explain in an example, so I don't want you guys to get too caught up in that. But usually when you want to look for a valid zone or order block to trade from, there has to be an inefficiency in price, right? And in a price inefficiency, which I've explained before in my other previous videos, is basically when you have an imbalance in price. Is when you have one full impulsive move price in the market and price doesn't come back to retest that zone. Okay, if price doesn't come to retest that zone in the future, it will, because the market has to offer a fair value. Okay, it's just the principles of the market. So before you look for an order block, it has to have a price inefficiency remaining before it, which is a zone that the price hasn't come back to retest, right? Which means in the future, it's at some point it will come back to retest and give you some sort of reaction from. Okay, so that's rule number one. Rule number two, it's again, as I mentioned, it's going to be an extreme or decisional block, right? The extreme is going to be the swing high, and the decisional is going to be before the swing high. Okay, it's going to be another zone which price can come back to retest and give some sort of reaction from before continuing on with the previous trend. But a point to be equated with is usually, if you backtest this enough, what will happen is price will usually come back, right? It'll give some sort of reaction from the decisional, right? And then it'll come back up to the extreme, okay? Because again, when there's an inefficiency left, the market has to fill that inefficiency at some point. So what it usually does, it induces liquidity from the decisional and comes back to the extreme. So that's why I always usually take my orders from the extreme. I don't like taking orders from the decisional, as it doesn't offer much swing entries. But from an intraday perspective, it does offer some nice positions. That's why I mark it out, because it can still offer some trading setups depending on what type of style you trade from. But it's also very important to keep in mind that the extreme holds much more weight and it's a much more valid zone to trade from. Okay, now in order to find the correct zone, you have an inefficiency, but you also need to understand if there's an impulsive move made from the zone which breaks structure to the left. Now in this example, we're looking at supply order blocks. Now in this scenario, price breaks structure to the left, right? It breaks this zone, breaks this structure point to the left, and then breaks this structure point to the left, right? It offers two impulsive moves to the downside, which shows that the sellers are clearly in control, and those impulsive moves were derived from this point, which means there's a good amount of institutional sell orders from this level, which will likely come back to get retested because of the inefficiency. So that's the zones we want to look for basic entries from, because it's the most high probable zone that we will see a nice sell reaction from in this scenario, right? The same equates if we're looking for buy orders. Now, for example, say price offers some sort of range setup like this, okay? Now, the impulse zone would be from here, right? This is the zone that breaks all this structure point to the left, okay? So the zone I want to look to take a buy order from would be from this zone. I want to wait for price to come back into my zone, and this is where I look for entries to come back to take the next high point, okay? That's the impulsive move, okay? Because this zone to the downside is just corrective. The push to the upside is the impulsive move. So this is the zone I ideally want to look for order entries from, okay? Now if you look at a normal market structure like this one, for example, if you're looking on for bears, if I just mark it out here, what you want to look for is something like this, right? Price pushes up, right, and then pushes down, and then we see some sort of correction. We come back to the extreme, price fills down, break structure to the left, comes back up to the extreme, and that's the zone where we want to look for the next push to the downside. Now this is what you refer to as clean order flow, right? It's when price comes back to the extreme repetitively, showing and consecutively breaking structures of low. Now this is another high probable zones to take orders from, whether it's buying or selling. In this scenario, we're looking to sell, mainly because price comes back to the extreme each time and offers impulsive pushes to the downside, breaking all these structure points to the low. Okay, so I hope that does make sense for you guys. Okay, I'm trying to make this as simple as possible. Now, okay, the last point: does the order block exist on high time frame? Now, I do see this a lot in the beginning with students, where they send me their charts, and I see, for example, they've marked out their zones, and it only exists, say, on the 5 minute or the 15. It doesn't exist on the high time frame, 30 minute, on the 1 hour, on the 4 hour, for example. When an order block, right, meets these criterias and it also exists on the high time frame, it's a much more valid zone. For example, I only like to take trades from order blocks that exist on the higher time frame, because when they exist on the higher time frame, it shows you there's much less probability of it being a manipulative zone, because in order for manipulation to take place on higher time frame, it requires a lot more capital. Okay, and it's much less likely. That's why when you scope down a lower time frame, like the 15, the 5, and the 1 minute, you see a lot more manipulation take place. Even though price is fractal, there's a lot more manipulation that takes place on the lower time frame rather than the higher time frame. So when an order block does exist on the higher time frame, you can understand it's a much more higher probable zone to take your entries from, whether it's a decisional or an extreme. Okay, so I hope you understood that. Now let's move on to a real life example where I can actually demonstrate how to use this setup. Now, okay, now in this example, what do we see here on the left? Okay, price comes back, right, and takes out this liquidity point here, liquidates all these sellers, takes out all these stop losses, and then pushes to the downside, makes that impulsive move, and takes out this structure low. Okay, now we understand that. I'm going to mark this out. What do we see? We see a breaker structure to the left, right? We see clear sellers in charge. Now, I want to now look for imbalances. Okay, now price is already sort of retraced. So there's two zones where I've got my eye on. Okay, now there's actually three, but the two zones I want to actually look at is this. Okay, this is one. Get rid of this. This is my decisional, right? Mainly because there is still an imbalance here that price has not filled, and there's liquidity here as well, which I'll leave out. And then the second zone is here, right? This is my second zone. This is my extreme, right? Now you're probably asking, why have I not put an extreme above here? Because there is a bit of an imbalance, mainly because price has already liquidated this high. Okay, it's liquidated this high. It's come back and collected all stop losses. So price coming back to this extreme is less likely. Again, I recommend you backtest this, but this is something a bit more complex when it comes into liquidity concepts. But again, what do we see? Okay, price comes back and breaks this structure. So there's two prominent zones: the extreme, right, which again, it's an order block that exists on a high time frame, and it has an imbalance on it has an imbalance left, right, a price inefficiency that still has not been filled here. Okay, now if I go back, now price is coming close to our zone. Okay, now what I want to see for this scenario to be valid, so for example, if I want to take a sell from my decisional block, right, I need to see a breaker structure of this low. If price taps into our level, my decisional level, and breaks this zone, then I want to look for price to come back, right, retest my zone, and then I want to look for shorts back down to potentially to come back to this swing point here. Okay, now if it does not break this swing this low, then I want to look for price to come back into my my extreme zone. Why? Because there is still imbalance left, which is much likely to get filled, and that's my preferred zone to take the sell from anyway. So if it comes back and retest this zone and come back here, I want to look for sells from here. Okay, very simple. Okay, now again, I'm gonna mark out this. So I'm gonna let it play and let's see what price does. Right, we see a nice reaction. Let's wait. And there we go. Okay, price, what does it do? It fails to break this low. It comes back and retests the low and then makes the impulsive move to the upside to come and fill in our main imbalance zone from our extreme, like I said before. Okay, now again, let me just make something simple. Let's just check these things off the list. Is there price inefficiency? Okay, yes, we had 2 price inefficiencies left, and have those price inefficiencies been filled? Yes, they have now been filled, so we can tick this off. Is it an extreme or decisional block? It failed the extreme, but it did give a nice reaction from, which means there is strong selling pressure. Now it's come to the extreme, so it's our more favorable zone, so we can tick that off. Was there impulsive move made from the zone? Yes, there was 2 impulsive moves made from both zones. Okay, the first from the swing point, which broke this structure point, and this this decisional zone, which actually was the most closer zone that broke this structure point to the left and pushed price down even lower. So it's both swing highs in this example. So yes, we can tick that off as well, as impulsive zones moves were made from both zones. And does the order block exist on a high time frame? This point is very, very important. So we are on the higher time frame, on the 4 hour. Yes, it does exist on the 4 hour. We have the buy, we have the drop, rally and drop, right? And we have a push up, a pin bar, and then we have the push down with imbalance left. So let's go on the 6 hour. Yes, we do. We have the buy before the sell that led to the inevitable push down, and then again we have the buy for the sell that led to the push down. So the extreme is much more valid. Let's look on the 12 hour as well. Let's see if this order block is still valid. Yes, it's still there. Okay, the buy before the big extreme push, because you have to remember, who would be in the right mind would be buying here before such a big sell-off? Okay, it's institutional capital. Okay, and this is something I'll explain in another video because I don't want this to be too long. But when you see things like this in form, or these blocks, it creates a much higher probability of this being a good a reaction zone, or high probable supply region or order block to trade from. Okay, and this is what you refer to as a drop base drop, or in the other scenario it'd be called a rally base rally. Okay, and then that would be the zone where you want to look for price to come back to take a order from. Okay, so I hope that does make some sense to you guys. Okay, so it ticks off all our criteria. So now I understand that I can look to take a order from here. Now again, depending on how you trade, you can either look for a sell limit or a confirmation entry. Now in this scenario, because it's on a high time frame and it's much more probable, I would just rather leave a sell limit order at this zone. Now you can either, again, depending on how you trade, you can leave it at the 50% zone or at the normal start of the block. Usually I like to trade from the 50% zone, mainly because it leaves much more opportunity and to refine my entry. Again, still waiting for price to come up and fill imbalance to the extreme, so I could leave price just above the high and looked for price to come back to the swing low, which is just below here. If I mark it out here, so that's my target. Let's see how price plays. And there we go, we see a nice reaction from our extreme zone, and let's see how price reacts. Right, we're seeing a nice reaction from the zone, which offers a nice 1 to 15R just by simply understanding how the order block met our criterias, which came back to the extreme, which gave us a nice reaction from the decisional, but end up coming back to the extreme, which offered the main swing push down. And because this is on higher time frame push, you could even look to swing this even further down to maybe even this zone where you have a nice imbalance. Right, you have a nice imbalance from this zone. So say this is a demand, so I would even look to potentially target this zone here, because mainly you have, if you look here on the left, you have a nice imbalance left here. Okay, if I could highlight it here, we have a nice imbalance left here. So price will likely come back to the extremes of this low to come back and fill it, which if I go back on the 12-hour, we can look for price to even potentially come back all the way down here from our extreme level, which offers a RR of 1 to 32. Let's see how that plays, and as we can see, it played out very nicely, coming back to our target. Now, I hope you guys found this video useful. I did try to break it down as simply as I could. If you guys did enjoy this video, please leave a like and subscribe. It does help with the algorithm, and please share it. It does help us a lot. If you guys are interested in any of our services, links will be in the description down below. Also, we have a free Telegram group, which you guys feel free to check out, where I upload free setups and charts on a weekly basis. So feel free to check that out along with results. If you guys are interested in anything, as well as any free value, which I give out a lot in this Telegram as well. So with all that said and done, I hope you guys enjoy this video. Please leave a like and subscribe, and I'll see you in the next one. Bye bye.